Hey everyone, as we finally welcome a new year, we can look forward to the potential 2021 brings with it. Yes, there are still many hurdles before us, but we can see the light at the end of the tunnel. Not just the vaccine and the positive impact it will bring, but numerous other factors coming into alignment that have the potential to drive a surge in commercial real estate investment. Transaction velocity has already made strong headway since it hit the second quarter trough. The total number of sales in the fourth quarter of 2020 are estimated to be nearly double the levels we saw in the second quarter. Although that's still well below what we saw in 2019, it is still more commercial real estate closings than the fourth quarter of 2006, the height of the pre-financial crisis cycle. The beginnings of a transaction recovery are forming. There are a range of factors primed to boost commercial real estate sales momentum in 2021, especially in the second half. The recently passed $900 billion fiscal stimulus will be an important element. It includes a $284 billion infusion into the Paycheck Protection Program, which gives small businesses forgivable loans to support the rehiring of staff. In addition, a new round of $600 stimulus checks and revived federal unemployment benefits of $300 per week will bolster spending. So although a full recovery will require getting control over the pandemic, the new stimulus will be an important ingredient in sustaining the economy until we get there. And finally, getting the new round of stimulus passed will eliminate investor uncertainty. That will be a key ingredient in unlocking investor decision-making in 2021. At this point, it looks like we've made it through the worst of the economic downturn created by the health crisis. So rather than focusing on downside risk, investors are beginning to focus on upside potential. And fueling that drive will be an unprecedented wave of capital. Currently, there is about $5 trillion in US money market mutual funds. That's about $2 trillion more than normal. In addition, there's about $16 trillion in US savings deposits, $2.5 trillion more than normal. With the COVID vaccines in production and the stimulus package passed, declining uncertainty levels will begin to unlock this wave of capital, fueling transaction activity. When this money is combined with the readily available debt financing and low interest rates, commercial real estate sales could reignite in 2021. Naturally, this investment will not come all at once, and not all markets or property types will share in the rising activity equally. Specific markets still contending with uncertainty, like vacation destinations and major gateway markets that have been hit particularly hard by the pandemic, may see a slower ramp-up pace. Likewise, property types with many unknowns, such as urban office, seniors housing, older shopping centers, and big box hotels that cater to conferences and events, will face more headwinds. But once the tide turns and there is more clarity on the outlook for these metros and property types, the flow of capital to these slower reviving segments will escalate. If these factors align as expected, 2021 could deliver a significant rise in investment activity, and the economy will take another step toward normalization. Uncertainty about the outlook beyond the pandemic is finally abating, and that will bring additional clarity to investors who keep their eyes on the horizon.